out here. You move, you change, and look, there's a new environment all of a sudden. Okay, so two important things. Probably have to do this video again on another day because I believe this is extremely important information to understand. And it's going over the difference of understanding the difference between a speculator and an investor. And a lot of you guys hear the ideas of, dollar cost averaging, and you've heard me many times say, I don't like dollar cost averaging. I like time averaging. And today we have the proof of why that is. I've been looking for this for so long, and I found what I was looking for. This is what we're going to go over today to start with. We're still going to go over Bitcoin and we're going to go over Ethereum, but today I want to look at something specifically, which we were actually going to dive into. Just a little bit of a quick change over now. BTC share like this. Okay, so in the links down below, there is a resource from Schwab Marketing. And does market timing work? Now, this is for the investor only. The speculator, the more complex issues about market timing, we will be going over later. But I wanted to go over this because it is an absolute necessity to understand why I say invest when you can. Don't dollar cost average. I've said this many times. People have been confused when I said this on Twitter, and now we have the evidence as for why that's the case. So I'm going to read you through this article. And again, this is not my article. This is Schwab's article. Fidelity has something too, which is the PDF I was talking about. Still can't find that for whatever reason. But nonetheless, I think this is going to be a great way for us to start and go over. It says, imagine that for a moment you've received your year-end bonus or tax refund and you're not sure whether you should wait or you should invest now. After all, the market recently hit an all-time high. Now imagine that you face the same kind of decision every year. Sometimes the market is up, sometimes the market is down. Is there a good rule of thumb to follow? Our research actually shows that the cost of waiting for the perfect moment to invest exceeds the benefit of perfect timing. And because the timing the market perfectly is extremely difficult to do, it's basically like winning the lottery for most average people. So here is the important sentiment for the investor. So right now we're going to take a look at basically 5 investment strategies and styles. So number 1, you have Peter Perfect. Peter Perfect Market Eater was the perfect market timer. He had an incredible skill or luck and was able to place $2,000 into the market at the year end at the very lowest monthly close ever. For example, Peter had $2,000 to invest at the start of 1993, and rather than putting it immediately into the market, he waited to invest at the end of January 1993, and that's the month that the S&P 500 was its absolute lowest. At the beginning of 1994, Peter received another $2,000. He waited and invested the money that he had gotten in the March 1994 at the exact low of that market. Peter Perfect continued to make these investments every year through 2012. Next, we have Ashley Action, and this is actually one of our favorites here. Ashley Action took a simple yet consistent approach. Each year, once she received her cash, she invested her $2,000 in the earliest market moment possible. That means, banks are open, money goes into the market, I'll think about it next time. Matthew Monthly divided his annual $2,000 allotment into 12 equal portions, which he invested at the beginning of each month. This strategy is also known as dollar cost averaging. You may already be doing this through regular investments in your 401k, automatic investment plans, which allow you to deposit monthly into mutual funds on a set timetable. Rosie Broughton had an incredibly poor timing strategy, or perhaps terribly bad luck. She invested her $2,000 each year at the market's peak in stark defiance of the investing maximum of buy low. For example, Rosie invested her first $2,000 at the exact high in December 1993, that month for the S&P where it hit its peak. She received her $2,000 again at the beginning of 1994, and at the very end of August 1994, she invested at that peak as well. Larry Linger left his money in cash investments using treasury bills as a proxy. Sorry, Larry Linger. Every year and never got around to investing in stocks at all. Oh, boring Larry Linger. He was always convinced that lower stock prices and therefore better opportunities to invest his money were just around the corner and never entered the markets. The results are actually the most beneficial for those who invest immediately, the moment you have capital, regardless of where the market is sitting. Now, this is for investors only, and it changes drastically for speculators. So for the winner, if we look at the graph below, which we'll go over, it shows how much the hypothetical wealth each of these 5 investors would have accumulated between the years 1993 and 2012. Actually, we also looked at 68 different separate 20-year periods, finding similar results across all timetables. Naturally, the best results belonged to Peter, who weighted his timed his annual investment perfectly. He accumulated $87,004, but the study finds the most stunning effects. Ashley Action, our favorite investor, came in second with only a difference of around $6,000. Ashley Action took 81,000 home, or sorry, $5,354 less than Peter Perfect. Now, Peter Perfect probably was staring at screens all the time, doing all this nonsense to try to figure out exactly where that wick low is on the spring. Well, Ashley Action was out surfing the waves, going skydiving, and enjoying her sweet merry time in the rest of the world, and never once looked at a chart. The difference between these two investors is only a small, minute percentage, and Ashley Action was just behind the tail and never once had to think about when or why she was investing. She put her money to work early as soon as she received it each year without any pretense of market timing whatsoever. Matthew's dollar cost average approach, which I have consistently said is not the greatest result, is just a little bit behind Ashley Action, our favorite skydiving, scuba diving, seafaring friend that we go surfing with on weekends, earning him a third place of $79,510 at the end of 20 years. That didn't surprise us. After all, in typical 12-month period, the market rises 74% of the time. So Ashley's pattern of investing first thing over time yielded just slightly lower prices or slightly higher prices than Matthew's monthly discipline, and thus at the end yielding higher wealth. Even bad market timing trumps inertia. Again, here we can see in this perfect timing, Peter, 87,000, Action Ashley, the fun-loving go-getter who never once looked at a chart, 81,000, Mr. Dollar Cost Averaging, frequently a bit more conservative, 79,000, poor, horrible timing person buying the exact tops of markets over the last 10 years, 72,000, and stay in cash investments, 51,000. So this hypothetical idea of what I wanted to go over here is about perfect market timing for the average investor. Speculation, what we talk about understanding the cycles of the market, is supposed to help you gain confidence in this type of investing. Now, you could just blindly go and play Ashley Action's game. You should be out surfing, climbing mountains, and enjoying your time with your loved ones because the market is actually really good at producing results. One of the ways we've often mentioned that you should overcome this is to invest in the things that you find interesting. Here, all these investors did invest in the S&P 500, which is indices of the top 500 companies in the United States. So you can more or less assume that it's going to do well. Now, as the companies change in derision, whether this company is doing better, it falls out of the top 500, it now gets added to that indice, and you can buy a basket of all of those. We've looked at stuff like this with the DeFi perpetuals that FTX offers, another way to find exposure to Maker, KNC, AAVE, Avalanche all at once without needing to pick that one winner. Now, this type of investing I think is so important, and so many of you guys have, oh, should I be waiting to buy more Bitcoin? Just shut the fuck up and invest immediately and think in terms of decades. I've said this every day on pretty much every live stream. And the reason we go over all of these market sentiments so that you guys can learn better where we are in the markets is so that you have the absolute confidence of why it is you're investing, right? Because if you have to invest in just Bitcoin over, say, the S&P 500, which has 500 companies stepping up to bat to swing for your portfolio, you need to get multiple areas of this investment right. Now, you happen to be in one of the most lucrative sectors ever, and for that, I congratulate you. Technology in itself is generally exponential and also deflationary, which means not only does it produce massive gains, it also reduces the cost of many of the things you wish to buy. For instance, I'm sitting on a camera with absolutely incredible lens quality where I can like zoom into my face like this and give you the did you invest this month eye? And I can zoom out, and I've got a microphone, and I can switch between screens. I can go like this, and you got my bigger screen, and I can go like this, and you got me zoomed in, and then we can go back to the screen just like that. And this is the deflationary nature of technology. What used to take an entire publication house, I have right in my freaking hotel that I moved right from the house just less than 12 hours ago. This is a really, really important article, and again, the links you can find in the description down below. Please go through and read the rest of it. It does show the average return of investment over these years and how that worked out and all their math. So in brief, given the difficulty of market timing, the more realistic strategy for the majority of you, especially the people who are new, is just to invest immediately. It is best described in one of my favorite adages. Do you know when the best time to plant a tree is? 20 years ago. The next best time? Right now. Plant those trees, put those seeds in the ground, and water them consistently, and you will be absolutely impressed with how much they grow over time. Okay, over to TradingView, back to start with Bitcoin. Now, there's a lot of ideas like, oh, are we in the depression cycle? We just had our first test. That was actually quite nice to see. Well, you could look at this as both tests. Either way, we didn't break below the trading range, another hyper important thing to see. And if you even want to squeeze it up there, based off our primary support, back here when we first broke through the $30,000 area, we've basically touched that again. This is what's known as a test, and it signifies where we are now in Bitcoin phase D. Again, we're going over the Wyckoff accumulation courses and studying this as well. So Ethereum is another great opportunity to learn and study right now. So we're going to go over that. Let's make sure we've got the full screen here. So we moved into phase D. We had our spring, our primary test, our kind of a minor SOS. And again, you can go deeper into your homework and studies by either just researching Richard Wyckoff on the internet, because there are innumerable amounts of resources of everything that we teach and study, or you can join the private group in the links down below, where we have a mastermind of over 500 people that are constantly working and collaborating together and going through the learning process. So if you ask a question, and even if I'm there sleeping, there's someone else who is going through that learning process that is more than happy to articulate it to you, because it helps them learn more efficiently as well. We've got many educational PDFs that we're producing and courses that will be added onto that over the next few months, but just be patient. There's a lot of work to do. What I believe we just witnessed was the first LPS after the minor SOS, and this is usually signified by a few things. Now, if we go in, we can look at this particular area of phase D a little more closely. Number one, we did not touch the point of control on the full screen. That's pretty important. Usually we would want to even test this area. So a last point of supply tests the last area of the point of control, which is basically where there is the most buying and selling volume, and this is signified by what's called a POC in your VPVR. Anyways, it's besides the point, but we did close above that line, and that to me signifies what we call an LPS, or last point of supply, or the last point of support. Although usually it's last point of support on the downside, last point of supply to the upside. So LPS stays the same in both distribution and accumulation, although it means two different things. Right now, on the smaller scale, again, this is where we can start to see some of the more market dynamics of phase D. Number one, really interestingly, look how much volume it took to get us up. This was a sign that we were weakening versus the amount of supply here. So here we got this much effort, or this much result from very little effort, and then here we needed a lot more effort to get almost equal result. This is the sign that we were kind of weakening out in that phase, and we start to see a change in that character now. So if we go over and we focus specifically on yesterday's kind of selling climax, well, first off, you can see we just touched the top of our trading range based off of our automatic rally, which we can see. Again, if we roll out to the 4 hour, our automatic rally is around this point. Again, it's coming from the very first wick of the breakout of the primary support. Now there are two here. Obviously, you'd actually want to draw them like this. There are two bars technically, and we did see a wick straight up to that top of that bar already, and we see this huge flying doji candle. This is actually quite a bullish signal, although ignore candles for the start of it. Oh look, and even more bullish signals hitting the market right now as well. So again, guys, you know, do I short markets like this? No. Could you make more money? Could you make money on the downside? Yes. We're going much higher, and from an investor standpoint, because a lot of you are new to investing, just you can be in basically a total pure stage of accumulation still. I stand by that. Now, one of the fun things we see here is we can actually measure the up thrust. So again, look how much volume it took to get up this high, which was approximately 20%, I believe. I'm sorry, 9%, 10%. And the amount of volume that or supply we needed to get up very similarly today was actually less supply, equal price. So here we were approximately 7 to 9% as well. Now, this LPS is probably not done. We could measure it like this. We could actually be drawing it as a bull flag to some degree. This is actually another really helpful market indicator. Although you'd want to draw it like this, and it's a little deceiving, because both your secondary test here had a lot of volume come in, but you want to compare your shakeout or your spring with the previous spring. So over here, our previous spring should be as high as the spring that we accumulated right here, which is just what it is. So I believe this is the spring. We'll probably see a little jet back into 12.20, 12.19, 12.18, and then go much higher. Even yesterday's video, We'd speculated that we were running out of weakness, and if we broke this horizontal trading range, we could test 1340 to 1240. We did that exactly. There are a few other ways to do this, and a lot of you guys had asked me about momentum indicators, so we will vaguely go over that as well. I do think that adding noise to your chart is never a great way to go, but just for fun, let's take a look at the 4 hour and use our CryptoVac Bollinger Bands here and take a look. Okay. So the LPS, you know, there's a lot of speculation of the LPS coming down even as low as maybe 1172. Anything higher than our previous spring would be great. And as you can see, it would actually be nice to see almost equivalent sale volume come in for this test here. So I would like to see a volume up to here. But right now, if we just have limited sell, that itself also indicates the potential of an LPS. I'm ultimately bullish. We're early on in this bull market. I've said this many times when we were at $20,000 and people are like, oh, is it gonna go higher? I'm like, look at what we just took by Ashley Action's decade-long plan. Just invest daily. If you're new to market timing, don't think you can figure it out and beat the markets. It took me over a decade to get to the point where I can generally see where the market is and make advantageous leverage plays to my position. But me, still, I am spot buying on a monthly basis. I don't think about it. That's the day I have the money to spend from revenue in. That's the day we buy. Now, ultimately, yes, we could make conjecture that anything below the point of control for Ethereum here is fantastic, and you could wait for that. And if you're spending maybe if you're just getting in, you want to drop 100 grand in, waiting for below the middle of the trading range is a smart way to go. But take a playbook from Ashley Actions. Don't spend all of your time in life staring at a screen. It's not beneficial for you. You're going to get way too emotional, and you're probably going to make a lot of mistakes. One of the best things you can do right now is learn how to not make those mistakes, and that's by following Ashley Action's plan. Again, please read that in the links down below. Again, actually, we can go back to this BTC share. One of the things I wanted to take a look at is just the strength of the DeFi sector in general. So again, DeFi Perp bounced right off the top of its trading range. Shout out to Rasher for sharing this one. We've got a widening megaphone pattern from Mr. Livermore. And take a look at what AAVE did today. Another 12% up. You've got Band up another 3%. Uni up at 19% as well. The entire DeFi sector, as we have gone over before, is extremely powerful. Use that to your advantage. You can use the DeFi perpetuals by going to arcanebear.com/FTX, and instead of buying one, you can invest in like 25 different perpetual or basically DeFi tokens at once without having to get the market right by just picking one. You can kind of pick all of them. I think it's a great way to go for the average investor as well. It's basically the S&P 500 of the DeFi sector, and is a great way to go. Okay. Thank you guys for joining us on today's episode. I hope you didn't get shaken out in last night's little LPS on Ethereum too. I know there's people who are like, oh yeah, I shorted that. I was stupid crypto moon boys. What they don't understand is larger market macro perspectives, and that they could make a fuck ton more money by investing on the long term instead of the day trading. There are countless people that will teach that. There are only very few investors like Jim Simmons who manage to make billions, hundreds of billions, might I add. And that's because they hired scientists, people who could predict the aphelion of comets as they travel around our burning molten star, or maybe not, I don't know what it is, but let's call it a burning molten star. People that can predict that are really good at predicting markets, and they made hundreds of billions of dollars doing that. Anyways, I hope you guys enjoyed today's episode. This is Teal with the Arcane Bear. I had an absolute blast of a time. I think that it is very important to understand the difference between the speculator and the investor. The investor, be like Ashley Action. She lives a great life, she makes great returns, and she never once needs to look at a chart. I know that might scare you away from looking at these videos because like, oh my God, what should I be doing on a daily basis? But that's why we also keep showing up and doing this, is so that the goal is to provide the calm confidence of being able to have someone who has got a decade of experience in market sentiments to go, hey, we're still here. We're still in an early bull market, because when there will be a time to take profits, and there will be a time to reallocate the portfolio, whether it's investing in your own businesses, paying for your parents' house, whatever it might be. I think it's important to do that. And just remember, guys, stay calm, stay confident. This is Teal with the Arcane Bear. Give us a thumbs up if you like this content. That's all for today's episode. I mean, I could take a could take a look at your guys' charts or like in your comments and questions and stuff like that, but I'm not going to do it today because we're in the city and I'm going to go out and do some other stuff. Like I have been doing my paperwork for my residency. Yeah, maybe I should get a haircut. Is it getting too long? Let's deal with the Arcane Bear. We'll see you guys again in the next episode.